Friends, if I told you that a Chinese company surpassed Tesla in revenue during the first quarter of 2025, with its net profit doubling year on year, would you believe it? This is exactly what just happened. BYD's Q1 2025 financial report can only be described as explosive. Revenue reached 170.36 billion RMB, approximately $24 billion, a year-on-year growth of 36.35%, and net profit soared to 9.155 billion RMB, approximately 9.155 billion RMB, $1.3 billion, an astonishing 100.38% increase compared to the same period last year. Even more remarkable, BYD sold over 1 million new energy vehicles, NEVs, in a single quarter, becoming the first Chinese automaker to achieve this milestone. In the pure electric vehicle, EV market, BYD has now beaten Tesla for 2 consecutive quarters, claiming the title of global sales leader. What's the business logic behind this? How did BYD achieve such incredible growth despite a slowing global NEV market? Today we'll take a deep dive into this industry-shaking financial report. To understand BYD's success, we first need to answer a core question. In the NEV industry, what truly constitutes a sustainable competitive advantage? Many assume it's branding, marketing, or distribution channels, but BYD has shown us that the real moat lies in vertically integrated control of the supply chain. Let me explain in simple terms. Traditional automakers build cars by assembling components from various suppliers, such as engines, transmissions, batteries, and chips. BYD, on the other hand, produces nearly all critical components in-house. 1. Cost control. While other automakers struggle with chip shortages and rising battery prices, BYD can balance costs internally through its vertically integrated supply chain. 2. Technical synergy. BYD's proprietary technologies, such as the Blade battery, DM hybrid system, and E-Platform 3.0, are deeply integrated, creating a combined effect greater than the sum of their parts. The Blade battery, in particular, is one of BYD's most significant breakthroughs. Traditional ternary lithium batteries are like glass bottles filled with flammable liquid, prone to catching fire or exploding upon impact. BYD's Blade battery, made from lithium iron phosphate, is designed like a sturdy blade that doesn't ignite even when punctured by a steel needle. This technological advantage is clearly evident in BYD's financial results. In Q1, its gross profit margin reached 20.07%, far exceeding Tesla's 16.3%, and ranking second among Chinese automakers, just behind CRS, the manufacturer of AITO. More importantly, BYD is also a major player in the trillion-dollar power battery market. From January to April 2025, BYD's global battery installations reached 53.4 gigawatt-hours, capturing a 17.3% market share and securing second place globally, just behind CATL, contemporary Amperex technology Commerce Limited. BYD is not just an automaker, it's also an energy company. It sells cars while also supplying batteries to other automakers. This dual identity gives BYD greater bargaining power and profitability in the supply chain. 1. For consumers, BYD has proven that Chinese brands can surpass global giants in both technology and quality. BYD's cars are not only safer and more fuel efficient, but also more affordable. Take the BYD Han, for example. This car accelerates from 0 to 100 kilometers per hour, 0 to 62 miles per hour, in just 3.9 seconds, rivaling luxury cars priced in the millions of RMB. Yet it costs only around 200,000 RMB, 28,000. This unbeatable value allows consumers to enjoy high-quality products at a fraction of the cost. 2. For investors, BYD has demonstrated rare profitability and growth potential. With a net profit of 9.155 billion RMB, it's earning over 100 million RMB, 14 million per day. And this growth is sustainable because it's rooted in technological advantages and supply chain control, not reliant on subsidies or burning cash. What's more, BYD's valuation logic is very clear. It's not just a car company, it's a comprehensive platform for the entire new energy industry chain. The automotive business provides scale and cash flow, while the battery business offers technological barriers and additional revenue. These two segments reinforce each other, creating a positive growth cycle. 3. For the industry, BYD's success has redefined the rules of competition in the NEV sector. Previously, the focus was on financing and marketing capabilities. Now, it's about technological innovation and supply chain integration. This shift is healthy for the industry because it encourages companies to invest more resources into real technological breakthroughs. 4. From a macro perspective, BYD's rise represents the transformation of Chinese manufacturing from made in China to created in China. It's a shining example of this shift. Not only has BYD established a dominant position in the domestic market, but it's also actively expanding overseas, exporting China's new energy technology to the world. Let's look at the direct competition between BYD and Tesla. Revenue. BYD's Q1 revenue reached 170.36 billion RMB, 24 billion, compared to Tesla's 138 billion RMB, 19.4 billion, giving BYD a 23.4% lead. This marks the first time a Chinese automaker has surpassed Tesla in quarterly revenue. Net profit. The gap is even wider. BYD's net profit of 9.155 billion RMB, $1.3 billion, is more than 3 times Tesla's 2.9 billion RMB, $410 million. Sales. BYD sold 1,800,000 NEVs in Q1, including 416,400 pure EVs, far exceeding Tesla's 336,700 EVs. According to Connev Post, this is the second consecutive quarter in which BYD has outsold Tesla in pure EVs. Counterpoint Research predicts that BYD will surpass Tesla in 2025 with a 15.7% global market share, becoming the world's largest pure EV seller. Among China's NEV companies, BYD's lead is even more pronounced. According to statistics from Chedongxi, revenue. BYD's 170.36 billion RMB dwarfs the second place. Net profit. BYD's 9.155 billion RMB accounts for 38% of the total net profit of 9 major Chinese NEV companies. R&D investment. BYD invested 14.223 billion RMB in R&D, more than the combined total of the other 8 companies. This is particularly noteworthy. BYD's R&D investment not only exceeds Tesla's 10.3 billion RMB, $1.45 billion during the same period, but also surpasses the combined R&D spending of NIO, Li Auto, and Xpeng, the leading Chinese EV startups. The capital markets have taken notice. Following the release of its financial report, BYD's H shares rose 35.32% in Q1, while its A shares surged by 47.34%, pushing its market capitalization past 1.13 trillion RMB, 160 billion. In stark contrast, Tesla's stock price plummeted 32.37% during the same period, wiping out over $460 billion in market value. This stark difference reflects investors' diverging outlooks for the two companies' futures. BYD is also accelerating its internationalization. The company has set a target of selling over 800,000 vehicles overseas in 2025 and is building production facilities in Thailand, Brazil, Hungary, and other countries. According to Sina Finance, several investment banks have given BYD positive ratings. Citibank, for instance, believes that concerns about BYD's inventory levels may be overblown and that the company's fundamentals remain strong. BYD's financial position is also solid. Its Q1 operating cash flow stood at 8.581 billion RMB, down 16.10% year-on-year due to increased inventories, which indicates the company is preparing for future sales growth. More importantly, its financing cash flow surged to 38 billion RMB, an 833.09% year-on-year increase, primarily due to funds raised from 8 share placements. This provides BYD with ample resources for further expansion. 1. BYD has established a strong competitive edge through vertically integrated supply chain control, excelling in cost, technology, and supply chain management. 2. BYD is not just an automaker, it's a comprehensive platform for the new energy industry, with a dual identity that enhances its profitability and growth potential. 3. BYD's success symbolizes China's transition from manufacturing to intelligent manufacturing, surpassing global giants in technology while pioneering innovative business models. After analyzing this financial report, I have a question for you. Do you think BYD can achieve its 2025 sales target of 5.5 million vehicles? Can it truly surpass Tesla to become the global leader in new energy vehicles? If you're interested in the development of NEVs and Chinese tech companies, make sure to like and follow our channel, Volt China. We'll continue to bring you cutting-edge industry analysis and investment insights. In our next video, we'll take a deep dive into the latest developments at CATL, the king of power batteries, and explore how it's responding to BYD's challenge. See you next time.